Hello everyone, just wanted to go over a trade breakdown for you all today. Actually one I took yesterday and one I actually lost. So I want to give you some context before obviously I go into the XO and order flow side of things into this. So yeah, let's begin with it. So again, we're on TradingView here and it's Bitcoin. I'm looking for a bit of context as we're in a downtrend. And I'm actually, I was expecting all of these, these poor highs kind of what we've got here, liquidity kind of levels to be taken out at some stage. And I was looking to capitalize on that with a potential reversal down towards this level of interest, this low. And why was this a level of interest? And it's actually mainly because it's a poor low. Again, if you want more details on the actual liquidity levels, I'm really always trading. There's a free video on YouTube, liquidity levels on my channel. Just go find it. It's quite in depth into that type of stuff. So again, why is this a level of interest? Poor low on the TPO, which I'll show over in a second. And also, I think everyone at that stage is anticipating these lows to be taken even further. But this low was like really nice. I was really interested in that low, which we did get a reaction off of, but it didn't actually end up in anything. And I'm going to talk you through that now. So heading over to XO charts in a second. We'll just put this over to here. Okay, so just over to XO chart. Bring this up here. You can actually see this is a TPO chart. And again, in relation to those liquidity levels above us and below price, you can see this is the one up here that I was anticipating being taken 3 blocks on the TPO, poor high on the chart. Whereas down here, this is the low I was referring to, where you got 1, 2, 3 kind of lows here, really not that great. And this is the reaction we got. In the end, obviously got stopped out on it. But I wanted to talk you through this reaction here as to why it was important for myself to trade it. So I've drawn the line out already from yesterday. And you can see as price is coming into the level, few things to note, okay? We're seeing a ton of liquidations coming into the level. So whether that be, on the linear or the inverse, I'm taking that into consideration. On the inverse, I would say anything above 30, 40,000 plus, I'm categorizing as a liquidation on my journaling of my tags, okay? And alongside that, on the linear or the inverse is 30, 40K. On the linear, I would say that is around 100, 120 plus K. In any given 15-minute candle, I'd say that's a spike in volume. So here, this is the inverse. You can see coming into the level, approaching it, 80, 60, 120K liquidations coming into it. Taking this into note, okay, you're coming into a level, open interest increasing, negative delta within this candle. There's new shorts within this candle. I've identified that. Whenever I see a significant OI bar increasing, I'm like, okay, what's going on within that candle? I'm kind of looking at that for further context, and I'm going, okay, there's new shorts within this candle, cool, but then where are they directly within that candle is the next question. I go, okay, well, on the left hand side is 1.2 million, 1.4 million. They're clearly towards the bottom end of that candle. We haven't taken the liquidity level yet, so I'm kind of still anticipating a potential trade setup. Once we take this, you get a bit of a bounce. I'm not interested in trading this. You then see another swing failure pattern actually directly of that low, sweeping below obviously these new shorts, okay, within this candle here, trapping them, with a trap value area set up here with a bullish candle formation, and a volume spike. And I'm going to dive into that now. So you've come into your level, open interest increasing, new shorts coming in here. You've then seen a bit of a light bounce. You've then seen a final sweep of this with a trap value area set up. I'm typically entering upon the candle close. Again, I actually can anticipate these SFPs in terms of like the trap value, etc., occurring a bit earlier than usual. So I got in a bit earlier here, whilst my invalidation was not the absolute low. It was literally just above that, actually at the point of control of this candle. Again, very small differences. So rather than having it towards the very bottom, I'm having it towards the middle end of this point of control. Why is that important? That's going to increase my final low. Rather than having my stop further down, it still creates logic to have it towards the point of control rather than the absolute low, whilst increasing the potential of my final R should the trade go in my direction. Okay, so in that case, we've seen a spike in volume, 9 million. Again, this is all relative. Okay, so 9 million, look at the last 20 candles or so. I'm going, this is definitely above the average. Okay, so you can see here, 2 million, even with the color shading, these are all fairly, they're not low, but if we're looking at this as in, using this as the baseline, this is all below average. This is above average. These two again are above average. But this is the really crucial one here. So you've seen the trap value area coming into your level where you've closed up here. The highlighted section is the value area. You've closed away from it. That's a trap value area. You've seen a spike in volume, 9 million. You've also seen liquidations, although it's not at the direct level itself. I kind of consider these as liquidations as they're coming into that level of interest. And then you've seen extended delta. So extended delta being, you're looking delta here, Okay, then you're looking at the delta minimum. There's minus 2 million here on the delta. Okay, on the delta minimum, with 739k on the final delta. That's a large discrepancy. Okay, large discrepancy there. And I'm saying to myself, okay, all these people down here are now trapped. As we've closed up here, and the delta's swung massively there. So you then saw a bit of a move up before then coming to stop me out. But the overall entry was, you know, a bit earlier than the candle actually closing, with the invalidation here. Simply hard stop, simply got stopped out. And just remember, upon that move up, you're actually then trapping all these new shorts down here. So I definitely took that into consideration upon taking this trade, because that just means, you know, that could have fueled larger move to the upside. But overall, it just simply ended in taking the low again, bit of a weak bounce, and continuing downwards. So hopefully that made a bit of sense to you as to why I took that trade, why I would take it again, even though I lost the trade minus 1R. And what I would also say to this is, you know, anyone trying to feed you that they're winning 100% of their trades, as I always would say to you, is incorrect. Losing is a part of trading. You need to, I wouldn't say embrace it, but get comfortable losing, because until you're comfortable losing, you're not going to become a profitable trader, in my opinion. And the way to do that in terms of become comfortable losing is essentially have your risk management on point, know what to do when you do lose, you know, all those different parameters in place, having a day stop, etc., that I go through in all my videos. So again, I put out daily updates in relation to all of this stuff on X, Twitter, at luxury with an extra Y on the end. And also I do completely unreleased trade breakdowns in completely written detail over on my newsletter, which I'll link below, again, completely free. So yeah, I hope you enjoyed this, and I'll catch you all later. Thank you for listening.